I've gotten lucky a lot in the stock market. I've called stocks like Palantir, like SoFi, like CrowdStrike, like Arista, like Nvidia, who I called the ultimate stock 300% ago, like Oracle 300% ago, like Palantir. A lot of these lucky calls that happen really was not about luck. It's about a system that I had, that I used again and again and again and again and again, which made me and my community an obscene amounts of money. And today, I'm going to give it away for free. Absolutely for free. Don't click nothing, don't smash nothing, don't buy nothing. There is no paywall. You're getting it for free because I want to see you guys succeed. Simple as that. So my formula is very, very simple. Over the past few years, I have developed a scorecard. And that scorecard basically allows me to look at companies in a very different manner than what most investors do. I've created a scorecard which gives me a number, an objective, repeatable, simple, business-only, no emotions number. Anywhere from 100 all the way down to below 50. 100 would give me basically a green light to invest, 75 would put it on a watch list, and 50 and below 50, all of these are basically to the trash, okay? Now, that system allowed me to find stocks like Palantir at $6, Tesla at $100, Nvidia at $30, and a lot more others. You can go through my channel and you'll see that even though I had some bad calls over the past few years, definitely not perfect, but I had a lot of smart choices and a lot of good companies which I bought, and I looked into the future and I got lucky. But here's the thing, it's not about luck. So let's not waste your time, my time, anybody's time, and let's go through the system right now. So check this out. The system is very, very simple. We'll go through the overall blueprint, and then very, very quickly, I'll go through every one of these explaining how the methodology works. Essentially, we have some objective numbers and some subjective issues. These would require you to use your brain to do some work. These are just math, okay? These are basically the easy part. This will require a little bit more skill, but it's still very, very simple, okay? And let's start first with test number 1. Cash heavy, low debt. Basically, this would essentially look at the balance sheet of a stock and say, well, does this company have more cash than debt? Could not get any easier than that, okay? The second test is about revenue versus margins. How much revenue we have? How much margin we have? Is it improving? Is it deteriorating? Low short interest, institutional shareholding, scalability of the business, what the shareholders got out of this stock over the past few years. Obviously, the moat, the quality of the CEO, and the recession-proofness of a company. Basically, can this company do well in bad times? And of course, as promised, there's also a little bit of a thinking process here. Not everything is objectively simple. Basically, this thing is secular trend. Does this company have what it takes to be on the right side of history? Are they in AI, electric vehicles, robotics, data centers, etc., etc.? You get my drift. Do they have the culture and the mission? Do all the employees, all the way from the CEO to the bottom employee, are everybody on the same page and they're culture driven? And of course, do they have the talent? Do they have top tier talent to actually get all of this done? Because if they don't have top tier talent, none of this matters, okay? So let's go through the test one by one, okay? Real quick, today's gonna be a quick video. There's no point in wasting your time. So first of all, I'm looking at cash versus debt. If we have more cash than debt, then the score is 5. Less cash than debt, the score is 0. And if we have double cash than debt, the score is 10, okay? Next, we're looking at revenue growth. If the revenue is growing under 10%, it's 0. If the revenue is growing 10 to 20% per year, it's 5. And if we're growing at 20% plus, it's 10. Next, we're looking at operating margin, okay? Very, very simple. We're looking and we're saying, okay, if this is below 10, 0. 10 to 25%, 5, and above 25% operating margin, the score is a perfect 10, okay? Very, very simple. As you can see, any idiot can do this. It's quite simple. And when I say any idiot can do this, literally, because I've done it, okay? There's a lot smarter people than me that have not gotten the picks that I've gotten because they don't use a system like this, okay? Now, for you, you're getting it today for free. Then I look at short interest and I'm saying, okay, if we have short interest at 10% plus, meaning that 10% or more of investors are shorting this stock, betting against it, it's a 0. 5 to 10% is a 5, and below 5%, that's a perfect score. Then we go to institutional shareholding. Do we have below 30% institutional shareholders? Is it a retail-based stock? 0. 30 to 60% is a 5. Above 60% institutional shareholding, it's a perfect 10. These things will take you about 5 minutes per company to do. It's that simple. Moving on. Next up, we have scalability. And scalability is very simple, folks. It's not that complicated. Is the revenue growth growing faster than the operating expenses? If my growth is 20% revenues and my operating expenses grew by 5%, my revenue growth is faster than my expense growth, which means I run a scalable business. That means I get a 10. If it's not, I get a 0. There's no 5 here. It's very binary, 0 or 10. Okay, then what have we done for the shareholders of the past 5 years or less? Okay, if the stock has been around less than 5 years, we're going to look at whatever time frame we have. If it's been less than the year, we ignore this whatsoever. Okay, basically, what have you done for me? Okay, if we have trailed the S&P 500 over the past 5 years, it's a 0. If we've beaten the S&P 500 by 10 or 20% with this stock, it's a 5. And if the stock outperformed the S&P 500 by 20% or more, the score is a perfect 10. This is the way to measure how good the company treats the shareholders. At the end of the day, it's all about what the stock has done for us. Then we go through the important stuff. This is not about numbers, it's about you using your brain. How good is the moat of a company? A moat means something that prevents competitors from taking the lunch of a company, whether it be intellectual property, patents, know-how, brand, client list. How good is the moat? A great moat is a 10, a mediocre moat is a 5, and no moat is a 0. How good is the CEO? The best CEOs in the world rank at a 10. A Jensen, and Elon Musk, and Alex Karp, just to name a few. A good CEO, probably at 5, and a lousy CEO is a 0. Is the company recession-proof? Here, there's a binary result, right? No company is fully recession-proof, right? So we either have a company that's no recession-proof at all, that's a 0, or somewhat recession-proof, because when the recession hits, everybody gets wet. So it's either a 0 or a 5, okay? Simple as that. Now, here is the interesting part, folks, okay? Do we have a secular trend? Is it in AI, robotics, data centers, whatever, right? 0, 5, 10 again. If they have a perfect secular trend, that's perfect. If they don't have anything, it's a 0. If they're somewhere in between, it's a 5. Culture and mission, okay? Is it a Palantir level of a company? Well, the entire company is recruited to a culture and a mission, that's a 10. Somewhere in the middle, it's a 5, and none of it is a 0. Do they have top-tier talent, like a Tesla, like a Palantir? 0, 5, 10, the same parameters apply. It's that simple. Now, we then tally this whole thing up, right? So a perfect score here would be about 125, right? Now, any score between 125 and 100, between perfect and great, basically means this is a once-in-a-lifetime exceptional company. Investable, fully investable, right? Anything that's 75 to 100, that goes on my watch list. I'm not investing right now, but I'm keeping this in my back pocket. Anything below 75, no, thank you. Not interested, okay? Simple as that. Now, you can run this list in an Excel spreadsheet right now. It's quite simple. It's not that complicated, but on Stock MVP, which is a platform I've created for you guys to evaluate stocks, we have a DCF calculator, we have a scorecard like this, which will do the work for you and will spit out the score. For example, here it's an 85, right? This test on stockmvp.com will give you everything you need to measure this qualitative test that I just showed you. On top of it, it will allow you to look at what insiders are doing, are CEOs selling or buying, what happens with the institutional shareholders, are they buying, what analysts are saying about the stock, a DCF calculator, a 5-year price target calculator, and all the data about the company in about 30 seconds for every single company. Stock MVP is my baby. I love what I've made with it. And you can try it today with 0 risk because you get to try it out fully functional for 7 days for a free trial. Check it out, try it out right now. Now, if you want to get better at this whole long-term investing game and you haven't taken the plunge yet, Patreon.com/Tom Nash. You learn how to get better. There's a lot of examples. I put up a few here on the screen. These are just some examples from my Patreon page, from my Discord page. A lot of investors that have worked with me have learned and improved the process, have learned how to become better investors, not stock picks. I'm not feeding anybody with a spoon. I'm teaching a system. If you want to learn that system, give it a go. Join the academy. I also offer a 30-day money-back guarantee. If you're not happy for any reason, would love to see you in the academy. Peace.